Did the Fed pop the stock market bubble? The stock market sold off after the Fed reduced the interest rate by 0.25% last week. In this video, we will analyze the stock market and identify what might have caused the stock market to sell off and determine what the stock market might do in the coming week. The Federal Reserve cut the interest rate by 0.25% last week, just what the market was expected. So why did the market sell off? The Federal Reserve reiterated the U.S. economy is doing well, unemployment is low, and things have been looking up since June. So why did the market sell off? None of the above seems to be the cause for the market to sell off. So what could it be? Could it be the market was disappointed because the Fed only reduced the interest rate by 0.25%? But that was the market consensus. Sure, there were some people expecting a 0.5% cut, but that was in the minority. So what was it that caused the market to sell off after the interest rate cut? Let's go back and look at the price action of the S&P 500 right before and after the Federal Reserve announced the interest rate cut. Here we are looking at the 5-minute intraday chart of the S&P 500, and this is the Wednesday session. As you can see, the first arrow here pointing to 11 o'clock Pacific time, which is 2 o'clock Eastern time. That's when the Fed announced the interest rate cut. Looking at the price action, initially it went down, then it came back up, so the market was still trying to decide what does it all mean. Right, after a while, then it's just kind of hovering around to its 3,010.42 level. Before the announcement of the interest rate cut, the S&P 500 was sitting at 3,014.95. Then here I have the second arrow here pointing at around 11:35. Now the press conference that Chairman Powell holds start at 11:30 or 2:30 Eastern time. So you can see right here it start to drop around 11:35. And here's why. At 2:35, almost 2:36 into the press conference, Powell answered a question from a reporter from New York Times, Gina Smolik. And Powell mentioned these two words in his answer: mid-cycle adjustment. Yes, mid-cycle adjustment. Those are the two key words. Chairman Powell called the 0.25% interest rate cut is a mid-cycle adjustment. In other words, not a beginning of a rate cut cycle. Later on in the press conference, Powell tried to clarify the mid-cycle adjustment phrase by saying, "What I said was it's not the beginning of a long series of rate cut. I didn't say it's just one or anything like that." When you think about rate cutting cycle, they go on for a long time, and the committee's not seeing that, not seeing us in that place. You would do that if you saw real economic weakness and you thought that the federal fund rate need to be cut a lot. That's not what we're seeing. So what this implies is that don't expect much more of a rate cut coming, because the market was actually pricing in a 3 interest rate cut in the near future. So right now, it doesn't appear to be so. Chairman Powell also mentioned is that the committee will monitor the trade tension to guide them in further monetary policy. Now, when the press conference is over right here, somewhere around 12:15, then the market sort of recovered a little bit, but then again, toward the close, it sold off once again. On the following day, the S&P 500 actually recovered a lot, almost got back to the level right before the announcement from the Fed of the interest rate cut. Then all of a sudden, at 1:25 Eastern time in the afternoon, Trump tweeted it and saying that he will impose a 10% tariff on an additional $300 billion of Chinese import to the United States, and that caused the market to reverse, and it lost all the early gain plus more. Now, is that the cause for the market to sell off? I don't believe so, because remember when Chairman Powell mentioned that the Federal Reserve will monitor the trade tension, the uncertainty that created by the trade tension will be one of the components that will guide them on monetary policy, on future monetary policy action. So if this imposing of a additional 10% tariff on this $300 billion of Chinese import, and that will certainly create some weakness throughout the US economy or the global economy, and that will definitely encourage the Federal Reserve to reduce rate further in the future. But the market doesn't seem so. The market, I believe, is still believe that the Fed is not going to get into a interest rate cut cycle because of that two key words, mid-cycle adjustment. So that's my belief. The market is expecting a cycle of interest rate cut, but the FOMC, the Federal Reserve, say that is not going to happen unless the US economy is pretty much in a recession. And I think that's what the market is sending the message, saying that the Federal Reserve is missing the picture that a recession is coming for the United States economy. And that's why I believe the market is continuing to drop until it get that message across to the Federal Reserve and they will take appropriate monetary action. But of course, the Federal Reserve never forecasts a recession. They always end up reacting to a recession. So in other words, they will not take appropriate action until there is actually a recession. Since the Federal Reserve announced that quarter of a point interest rate cut, the S&P 500 lost 2.75% or 83.02 point and closed on Friday at 2,921.89. Let's go take a look to see what the market might do next week. Here's a daily chart of the S&P 500. You can see right now, last Friday actually came up a bit toward the close. It came off the low, so it's finished up with a sort of a hammer-like type of a candle. And I wouldn't be surprised in the next day or two that we might see a little bit of a bounce. So if we do, where would be some of the level that I'd be keeping an eye on? Well, here is a potential resistance level somewhere around 29.73. If it come up, then I would anticipate to see some sort of resistance up here at this level before it could make a do or reverse back down. And if it comes down, here is the level of support that I will be watching, the 29.12.99. If it drops below that, then I will be watching this particular level somewhere around 2874.68 for potential support. So some of the possible scenario is maybe it could come up, tag this resistance at 29.73 and push us back, break this low here at 29.12.99 and work down to 2874.68 to see would it be able to get it bounce or chop around and develop some sort of a base. Let's go take a look at the SPY and the QQQ and see what we might expect for the coming week. Before I continue, I'd like to take a moment to remind you to click the thumbs up if you like the content in this video. If you are not a subscriber of my YouTube channel, click the subscribe and also the notification icon so you won't miss any future video from me. We are looking at the SPY daily chart here with the composite volume profile on the right. Also, I have a 50-period moving average just to illustrate that the trend is still remain up based on the 50-period moving average. Along with this long-term trend line, the price is still above this trend line here and also it closed above the 50-period moving average as of Friday. Now, also I did put in another level of potential resistance here at 294.95. As you recall that the S&P 500, I only have this potential resistance level up here. So what I'm going to be watching for the coming week is to see would it be able to get to this resistance level, I mean at 294.95, essentially somewhere around 295. And if it could not get past this resistance, I expect it to come down, test this trend line, and maybe chop around a little bit before it start breaking down and come down to this level here, right? And we might get a little bit of a choppiness before it proceed to continue to come down, because here is a little bit of a low volume in the middle of this big volume, this huge high volume region here. Right, so I do expect some sort of chop here, right, and then work its way down. If the market continue to go down, then eventually I would expect it to come down and tag this 272.42 area at this low volume zone here, a little bit of a low volume zone, and also we see some price come down or near that level for potential support. Now, if the market continue to go up, let's say a rebound, then I would expect something like this and pushes up. So it probably, push through the 294.95 level and come up, maybe tag this 296.92, then pull back and double check that, back test this, a resistance turn support, and then pushes through, and then maybe we'll see another assault at the all-time high. So that's basically what I'm looking at for the SPY. And let's go and take a look at the QQQ. Looking at the daily chart of the QQQ, I also have the composite volume profile here, along with the 50-period moving average and also this long-term trend line. As you can see, the price on Friday is close above this 50-period moving average and also close above the trend line. Now, I do have a support level here at 185.58 and a resistance level above at 191.47. And also I have a low volume zone here near this 187.63. So one of the scenarios that I will be watching for next week, if the market does bounce a bit, then I would expect this to maybe come up to this 191.47, encounter some resistance, and then pushes back and come back and back test this 187.63, then get a bounce up and push through the 191.47 and possibly get up to test the all-time high. That would be my upside scenario for the next week. Then on the downside, it could come up, maybe hit the resistance up here at 191.47, then come back down and pushes through this 185.58 and then back test it, and then come down to this trend line, and maybe it will find the support somewhere around the 182. But if it break below this trend line, then I expect it to the Q to work down toward this 175.73 low volume support area here. So good luck on your trading, and thank you for watching.